Marquardt is sponsored by the Marquardt Law Firm and does not attempt to solve your individual legal problems upon the basis of information contained herein. Instead, contact an attorney to discuss the specific facts and circumstances of your unique situation. The views and opinions of this program do not reflect the views of the Salem Media Group.
Be seated. It's time for Talk Law Radio with Todd Marquardt. Todd Marquardt, attorney at law in Texas. If you're a millionaire or a thousandaire, Talk Law Radio is now on the air. Call in with your business law question, your elder law question, veteran aid, Medicaid, build a business to get paid. 210-308-8867. Or ask a question online at marquardtlawfirm.com. That's MARQUARDT lawfirm.com. And now it's Talk Law Radio with Todd Marquardt.
Welcome to Talk Law Radio. I'm Todd Marquardt on 9:30 a.m. That's KLUP, and 6:30 a.m., which is KSLR, at 11 o'clock in the morning, Saturday. What is today? January 10th. Also in Houston on KNTH 1070 a.m. and 103.3 FM. Today's going to be a great show. We're going to be talking about federal income taxes with CPA Mark Nelson. But first, let's check in with the financial focus with Joseph Warren, financial planner with Financial Planning HQ, who is a financial CEO for Successful People. And he works with his father, Steve, and his brother, Jacob. They've been sponsoring the Financial Focus segment for a few months now. Joseph, welcome to the show.
Really happy to be here. Happy New Year.
Happy New Year. Actually, we're not supposed to say Happy New Year anymore because Larry David did a whole show on Curb Your Enthusiasm about how Happy New Year has a statute of limitations.
Oh, yeah. Is it 10 days? What's the rule here?
I don't know. But tell us about your business and how you help your clients.
Yes. So we're a financial planning business, but what we've noticed is that word financial planning is sort of a marketing term. Everyone says they do planning and create strategies, but very few do. A lot of times it's just money management. And what we do is fully comprehensive financial services. And a lot of it is a leadership role. So we bring in experts, top-notch experts, like the best of the best, like Mark Nelson, like you, Todd, to be a part of the client's financial team. And we look to create a mastermind. So you think about having a tax expert there, making sure we're giving the best tax advice, a legal expert like you, making sure we're giving the best legal advice, a financial planner, creating the plans and making sure it all fits and creates a better outcome when it comes to the numbers and their financial strategy. Of course, we have, a money manager is a big part of it, making sure their money's invested in the best way possible based on the way the world currently is going to give them the most return possible with the least amount of risk within the amount of risk that they're comfortable taking. And yeah, an insurance expert, making sure everything's protected. So we create that mastermind and actually have them communicate. So I've seen many times, I don't know if you guys have seen this before, but where the CPA will say, don't do a Roth conversion, and the financial advisor is saying, do a Roth conversion. I've actually had people come to me in that situation where they're getting conflicted advice. And the main problem there is their experts, financial experts in their life are not communicating. They don't all know what's important to the client, what their goals are, what they're actually going towards, and they're giving conflicting advice, maybe some short-term, some long-term. And when I see that, I want to say, I'm a kind guy. I don't know if I call people out on that, but I want to say, why are you paying two people to give you conflicting advice? It seems like a waste of money. So for our clients, any strategy that we create, we have that mastermind there. They're getting the best tax advice, but it's also being heard by the money manager because all these disciplines are related. And at the end, they get confidence that they're making the absolute best decision over and over in all aspects of their financial life. But not just that, I think a big part of it, more important, is they're avoiding the big mistake that people can make when it comes to their finances.
Yeah. I had a situation where a client had asked me to do a trust and to leave some of their assets to charity.
Yeah.
And their insurance annuity salesperson said that was stupid.
Yeah.
Well, obviously he wasn't part of the team.
Yeah.
What are some mistakes that you've seen?
I think one of the obvious ones that when I first, started in the business was people panicking and selling low during a market crash. So I've run into people before who, like in 2008, they told me they sold and went to CDs, and they missed out on, from 2009 onward, this amazing bull run, or just this amazing returns that you've had in the market since then. So one of them is just giving up because the market was low and kind of locking in losses for the rest of your life and then earning maybe 2%. Back that time, it was like 1%. So not even keeping up with inflation. So some of them are those emotional mistakes that I've seen. But to contrast that, when Liberation Day happened last year, the market dipped a lot because Trump said there's going to be a bunch of different tariffs on different countries. I don't know if you remember the chart. He said different countries had different percent tariffs. We called our money managers and we said, is now a good time to invest? And they said, yes. So we were calling our clients and saying to invest. And even though we're not just doing money management, we're creating a strategy. A lot of money managers shoot for the gold standard of beating the market. We actually had a lot of our clients beat the market that year because of that. Because we looked at their financial plan. We saw this is how much you have for investments, opportunities, and cash. We recommend that you put this amount in the market when it's dipped. And then it went right back up.
Right.
So it's one of these things where you get alpha, they call it alpha. You get this extra return from having really good advice and making good decisions over and over.
I see some people making those emotional decisions, like you said, when there's a dip in the market, and they don't ask anybody for advice about whether to do that. They just call their broker and say, sell, do what I want, not what's best for me.
Yep. And, the brokers, their job might be to take orders. It's not to tell you, I don't think we should sell. Or maybe they just don't care too much because they have 250 clients, 300 clients.
Right.
They don't have time to kind of, talk you off the ledge. Yeah.
Yeah. What are some other mistakes that you've seen?
I think, there's just so much nuance, so many different things that you can do wrong. But one that I've seen is just taking advice from people who might be biased, or even just online, like on TikTok and places like that. I think that's very common. But
right. What about doing a Roth conversion that ends up costing you more in taxes than you've anticipated?
That's another thing I've been seeing. Yeah. So, when you're during your working years, your tax bracket is your marginal tax rate. So if you're in the 22% tax bracket, in most cases, you're going to pay 22% in taxes for each new dollar that you earn. But when you get to retirement age and early retirement, you have to consider other factors. There's a taxation of Social Security at 50% or 85%. So that could mean, instead of the 12% bracket, if you're converting and you're taking Social Security, it could be you're actually in the 18% is what you're actually paying on those dollars, because they're inside where your Social Security is being taxed. There's IRMA limits where if you earn a certain amount of income, it pushes you into having to pay higher Medicare premiums. That's another factor. If you're early retired and you're not covered by Medicare, you could have ACA, Affordable Care Act, premium hikes based on that premium tax credit. And, there's lots of different factors like that. Even the new One Big Beautiful Bill, there's a senior bonus deduction, which you could get phased out of that if you're doing too much in Roth conversions.
Right.
So we actually look at the reality of what's going on and not just fill up the 22% tax bracket, because if you do that, you could actually be paying 42% in taxes, which is more than, a doctor, a married couple making $700,000 per year would pay.
Right.
So we actually make sure, does this actually make sense? We run the numbers. We have tax experts like you, which would definitely catch things like that right away. And we know with confidence, this is the exact dollar amount that you need to do. And that's just one piece of the puzzle. There's so many financial decisions you can make, things that I haven't even talked about, things that people may never even think about that they're missing.
Well, some financial planners might be recommending the Roth conversion just so they can get an IRA from another firm over to their firm.
That would be, example of conflicted, biased advice.
Right.
And I think in this day and age where information is so available, why are you paying someone to give you conflicted advice, in my opinion?
Right. It's good to have a financial CEO that's on top of all of the other subject matter experts.
Yeah.
And you and Steve and Jacob have been talking about that for a long time. You have any resources today?
Yeah, we have a lot of resources. So I talked about the Roth conversion. So if anyone wants to just talk with me about that, that's just one piece of the puzzle, but I'm happy to do free consultations with them, 20-minute consultation just to talk about your current strategy. But I would say anyone who has a significant financial issue, you're just not sure you're making the best decisions with your money, or you're going through something where you need to it's very critical you make good decisions, give me a call. We'd love to have a 20-minute consultation with you over Zoom, learn about your situation. And
What should they call?
the number is 210-444-2128. Again, that's 210-444-2128. Call that number. We'll get back to you right away. And we're also offering free books to the first 5 people who call.
Great. Well, it's the new year. You already said Happy New Year. Some people might be having resolutions to get a better financial plan. Hopefully they have a resolution to get their tax information to their CPA sooner this year.
Yes.
This is Talk Law Radio. I'm Todd Marquardt. We got to take a break. We'll be right back. Are you confident about your financial future? What if you had a clear financial roadmap and a team holding you accountable to make the best financial decisions no matter what? At Financial Planning HQ, Steve and his sons, Joseph and Jacob, have been helping San Antonio families since 1987 with inspiring, intelligent financial strategies. Whether it's achieving or maintaining financial independence, becoming more tax efficient, or building business wealth, we create a comprehensive, written lifetime financial strategy that's uniquely yours, based entirely on what's important to you. Don't leave your financial future to chance. Call Financial Planning HQ today at 210-685-2722. That's 210-685-2722. And take the first step towards financial clarity. That's Financial Planning HQ, inspiring financial strategies for San Antonio. Remember, 210-685-2722. Hi, I'm attorney Todd Marquardt. If you don't have a will, the state of Texas decides who gets your stuff, and it might not go where you think. I'll help you create a simple, legally sound will that protects your family and your wishes. Call 210-530-4278. That's 210-530-4278. Or visit marquardtlawfirm.com for your free consultation. Do it before you die.
9:30 a.m. The Answer.
Now it's time to discover your legal issue blind spots by listening to me talk about the law on the radio. And today we're going to be talking about tax law with CPA Mark Nelson. Welcome to the show.
Well, thank you, Todd. I'm glad to be here. We already got a Happy New Year, and I guess you said the statute of limitations has passed for wishing people a Happy New Year.
So that's the last Happy New Year you'll hear from us. Tell us about your experience and your business.
Okay. Well, I have a 2-partner firm with about 15 people, which can go up to 20 based off how many interns we have coming in and out. And we're a local firm here in San Antonio. We're primarily a tax firm, but we do prepare financial statements, do compilations, reviews, which is kind of a mini audit. You know, we don't do full-blown audits like public companies have to have. But if we do have a client that needs one, you know, we can refer that out. Our main focus is, closely held businesses and individuals, high wealth individuals that have complicated situations. And, we're not after we're not trying to compete with H&R Block, strip center tax practice. We have a number of family groups, that have a lot of investments, rental properties, royalties, have a lot of retirement assets, and, they need a lot of help with planning and making estimated payments. And we do have our largest client, which we recently got, is about $200 million in gross revenue. And so we've got some big companies, which we're comfortable with, that have international issues and also multi-state issues. And that's something that I'm comfortable with because I've just this year I'll be my 40th year in the profession.
Okay.
So I've worked in small CPA firm, of course, now a large CPA firm, Arthur Anderson. I worked in a large public company, a little firm who's now called AT&T.
Wow.
And I've also worked in the tax department, and have worked in a small, small company. So I've kind of seen it all, so to speak.
You have a lot of experience.
Yeah. Yeah. So I'm comfortable, working with big companies, or with, individuals, small, closely held businesses. And, I've done we do a lot of IRS controversy work. At any one time, we've got a handful of clients that have IRS issues going on.
Mm-hmm.
We can handle IRS audits, answering notices, working with the taxpayer advocate to solve those problems. And, people get very frightened when they get a notice from the IRS. But really the key is that as long as you communicate with them, you're going to be okay. But if you stick your head in the sand, then you're going to have problems.
Right.
Yeah.
Well, you work with Financial Planning HQ as a subject matter expert for some of their clients.
Right.
Tell us about that. What's it like to work with them and their clients?
Okay. Well, I'm like Joseph is saying, they're the financial quarterback, so to speak, that stays in communication and has periodic meetings with the subject matter experts.
Mm-hmm.
And we, throughout the year, when we have a mutual client, we'll have meetings, and, I'll run a tax projection, to make sure they're on track with their, with their estimated payments, or if we've put a tax strategy in place, that it's on track. Mm-hmm. And that it's coordinated with the, with the quarterback and with the legal people.
Yep.
And, the number one rule in the tax world is no surprises. Mm-hmm. And that happens a lot.
Mm-hmm.
And you were asking Joseph about, big hiccups. And so that's something we want to avoid at all costs.
Mm-hmm.
And then beyond that, it's, coming up with planning ideas and implementing those. Mm-hmm. And make sure they happen. And which takes a lot of follow-up and a lot of detail.
Yeah.
Joseph, what's it like to work with Mark Nelson, CPA?
Yeah, it's a pleasure. Him and his team are extremely well versed in tax law. They understand all the nuances and the strategies, and it's really fun hearing the ideas that you all come up with when we have those groups with the money manager there, and just having those people all together and the ideas they come up with together and how they understand how one discipline impacts the other. It's fun. I learned a lot from it. There's a lot of cool ideas that we've implemented for clients, like backdoor Roth conversions, family limited partnerships, even getting into setting up legal entities to save on taxes. So yeah, it's a really great experience. I've always enjoyed it. And I just like that they're committed to helping us create excellent strategies for our clients.
Awesome.
Yeah.
Just a reminder, this is Talk Law Radio. I'm Todd Marquardt here with CPA Mark Nelson and financial planner Joseph Warren, and we're talking about some hidden legal issue blind spots in tax law. And one of them, well, the big thing this year is HR 1 Tax Act, which is formerly known as the One Big Beautiful Bill Act. Tell us what's new on the horizon. What should people be asking about?
Well, from a 30,000-foot level, it basically keeps in place the tax rules that came into place in Trump's first administration in 2017. They lowered the top rate. Under Obama was 39.6, and now it's 37%. And basically, almost everything was going to go back to the way it was before 2017, after this year, had HR 1 not been passed. And so it keeps into place all of these measures that Trump put into place in his first administration, but also adds some things. And I know before we went on the air, we talked about the new, $40,000 limitation on property taxes as a itemized deduction, which, so many clients don't itemize anymore because, that's one reason, is because they can only deduct 10,000 of their property tax and sales tax. So this, that's going to help them. We also have a non-itemizer deduction for auto interest, or it can be taken as an itemized deduction. And we also have a non-itemizer charitable contribution deduction, up to 2,000 for married filing jointly, which contributions can also be taken as an itemized deduction as well. And so the big thing for business, of course, is the 100% bonus depreciation coming back.
Right.
Because it has been phased down to, I guess, like 60% for 2024. And now it's back up to 100%.
And so what does that mean?
That means assets that a business buys, as long as it's not real property, can be deducted 100% of it. The cost can be deducted in the year of acquisition or the year it's placed in service. So if you have a business and you buy equipment, then you can deduct 100% of it in that year that you buy it and place it in service.
Okay.
And so that's a huge benefit.
So manufacturing.
Right. Everything, the rules get into the depreciation class lives. Real property for commercial is 39 years, rental property is 27 and a half years. But basically everything with a 20-year or less tax life, will qualify for bonus depreciation or Section 179 depreciation, which is similar but has other limitations and criteria, and the limits for that have been raised as well.
Okay. Joseph, have you learned anything about the new tax act that you're excited about?
Yeah, I feel like Mark did a great job on that. I think the bonus depreciation is a huge part of it, just that ability.
That's huge.
I actually have a question about that if I can ask it. Does it have to be like all in one year, or could you like fine tune it where it's 50% one year, 50% the other? If that's possible.
Yeah, I believe you can elect, asset by asset if you want to.
So you could kind of do it that way.
Yeah.
But I mean, I've heard a lot of things. I mean, a lot of it is helpful for people in different situations, business owners. There's a new Trump accounts that came out, which is something, but I was actually reading something saying that maybe a UTMA might be better tax-wise than that. There's, new rules for charitable deductions.
Does your new baby qualify for the Trump money?
My older daughter doesn't, but my son Luke, yes, he does. And $1,000, I mean, I'll take it any day. Yeah. But yeah, there's a lot of stuff, and a lot of it, letting the experts do their work. So, Mark is very well versed in that, and when we're creating strategies, would ask him those questions, and he would come up with the idea. But we know that the basics of the strategy and just making sure that the client is getting the best advice possible when it comes to minimizing taxes, maximizing their investments in all aspects of their finances.
I got a question about the phase out on IRA deductions. If a married couple is earning more than $250,000 a year, and one spouse has a 401k that's employer sponsored and the other spouse does not, and wants to contribute to an IRA, but it's not going to be deductible, what type of retirement planning can they do? I'll ask the same question to both of you.
Well, I would consider doing a Roth conversion, which means there's an income limitation on making a direct Roth IRA contribution, which is probably around $200,000 now. It gets indexed each year, but there is a loophole around it, and which hasn't been closed to my knowledge, where you can make the traditional non-deductible IRA contribution, and then you can convert it to a Roth, and then you get the benefit of the Roth, where you can't deduct it anyway, and then when you withdraw it, the earnings, the whole thing, earnings principal, are non-taxable.
Okay, and so Joseph, how does that work in practice? You make the deposit into the traditional IRA account, and then you move the money from that account to the Roth account?
Yeah. And that's a great point, because sometimes you hear like do a backdoor Roth, but it's like if you make a mistake there, that could be very costly.
Okay.
So you take after tax money, usually like in a checking account, a bank account, you move it to your IRA, noting that it's after tax. And then from there, you convert that over to a new Roth. And one big thing to look out for is a pro rata rule. So you want to make sure that that's your only IRA that you have. Otherwise, you'll be taxed pro rata on the IRAs that you already have. So they'll force you to, if you have, say, a $300,000 IRA, most of it's going to be taxed when you do the conversion.
Okay. Well, got to have an expert, right?
Yep.
We got to take another break. Just remember to tell your friends about this episode of Talk Law Radio, because they might be itemizing their deductions. They might not be itemizing their deductions. And we just learned of 2 strategies that they can claim as deductions, even if they don't itemize. We got to take a break. We'll be right back.
Stay ahead of the curve and get the right information you need every day on 9:30 a.m. The Answer. Take us wherever you go with our mobile app, on Alexa, or through TuneIn, iHeart, or Odyssey.com. This is 9:30 a.m. The Answer.
Talk Law Radio with Todd Marquardt is sponsored by the Marquardt Law Firm and does not attempt to solve your individual legal problems upon the basis of information contained herein. Instead, contact an attorney to discuss the specific facts and circumstances of your unique situation. The views and opinions of this program do not reflect the views of the Salem Media Group.
In the beginning, God had one law: don't eat from the fruit of that tree. Then he gave Moses the 10 commandments. And now we have municipal, state, and federal lawmakers that won't stop creating new laws that might impact you without you knowing it. So listen to Talk Law Radio every Saturday at 11 o'clock in the morning, and Sundays on 9:30 a.m. The Answer on 4:30 in the afternoon. So we're going to be talking about the sinners and the saints because Martin Luther, the famous theologian, said that we're all sinners, but we're saints because we've been forgiven and absolved. So, Joseph, I have a surprise for you today
Yes.
because you're a fan of Bitcoin.
Yes,
Have you heard of Bitcoin Jesus?
I have not heard of that. No.
Okay. Well, the reason he's in this segment is because he's the sinner.
Oh, wow.
Because Roger Ver, an early Bitcoin investor known as Bitcoin Jesus, was prosecuted by the Justice Department to resolve federal tax charges. And he had to pay $50 million as part of this settlement.
Wow.
Because of his failure to properly report his Bitcoin holdings on tax returns when he expatriated from the United States.
Wow.
In 2011, he started acquiring these Bitcoins, and because he was promoting it, they gave him the moniker Bitcoin Jesus.
Wow.
And in 2014, he renounced his citizenship and went to St. Kitts and Nevis. You know where that is?
I think it's in the Caribbean.
Probably. I was asking because I don't know.
Yeah. Sounds like it, yeah.
Never heard of it. But due to his net worth, because he renounced his citizenship and was expatriating, he was required to file certain expatriation related tax returns. Are you familiar with that?
Right. The exit tax, it's called.
Okay. So he admitted when he filed these returns, he did not report all of his Bitcoins and didn't pay the required capital gains tax on their constructive sale.
Mm-hmm.
And so the failure to pay $16 million because of penalties and interest ended up $50 million. That's a pretty big penalty.
It's a good chunk of money. Yeah.
And so how do you feel about Bitcoin? Do some of your clients have Bitcoin? Is that part of their financial plan or roadmap?
Yeah. Never heard of Bitcoin Jesus, heard of Roger Ver. I know the government has a lot of blockchain experts, especially law enforcement. So I think back then people thought the government doesn't know what Bitcoin is. You can just do whatever you want. But at the end of the day, it's unethical not to pay the taxes you legally should pay. So I agree. That's definitely a sinner. I like it as a hedge against inflation long term, just like gold and silver, which has done very well for our clients as well. It's moving like a meme stock right now. It's kind of crazy, but I love it as something that cannot be just copy and pasted, printed out of thin air, and for a small percentage of a portfolio in case, they keep printing money, which I think is what's going to happen, and dollars might lose value.
Okay.
Yeah.
And Mark, you're the CPA, so tell us what's legally required with Bitcoin. Do you have to report it on your return every year or just when it's sold? How does that work?
Right. Well, there is a box on the return and has been for a while, and even on business returns, just asking if you own any digital currency. So you have to disclose that. But if you haven't engaged in any transactions, there's no reporting. But if you have sold Bitcoin or digital currency or used it to buy something, that's a taxable transaction, and you have to report that. You have to report the appreciation as a gain, usually a capital gain, just like a security. So if you sell the digital currency, the administrator or broker should give you a 1099 that'll show you the proceeds and the basis and whatnot. But even if you use one to buy other property, you've got to report that appreciation as a gain as well.
Okay.
So that's something people may not be aware of.
Yeah, that's a good point. Thank you guys for your input on that. Before we go to the caller, I just wanted to say that he's somewhat of a saint now because he did resolve the issue.
Yeah.
So I think the IRS and the Justice Department has forgiven him.
Yeah.
because he paid his $50 million penalty.
You've been redeemed.
Wow.
That's good.
That's right.
Wow.
Okay, we have a caller. Bert, you're live on the air. What's your question?
All right, it's going to be a tax question. I'm and I'm not going to say the happy stuff, but I will say prospero anno e felicidad.
Okay.
All out.
Okay.
Merry Christmas.
The thing is, I'm tax exempt, and I have to constantly, due to my disabilities from the Army, I've been granted tax exemption 100% since 2014. Now, people keep charging me taxes. Is there a universal card in Texas? And with the federal government, when I withdraw some funds, they automatically take out 20%. How do I recoup that?
Well, we've had one or two clients that get a pension, and and part of that, or all of it even, may be for disability or driven by disabilities they've had. So there is attachment. You can you have to attach the documentation that says that it is a disability, or this much of the pension is due to a disability, and there's legal substantiation that you can attach as well, and claim a deduction or reduce the taxable amount of the pension. And I guess we've had two clients that have done that, and it works. We file the return with the attachments, and he gets a 1099-R that shows that, well, all of this pension is taxable, and then but we show less than all of it as actually taxable on the return. And with the attachments, it's worked, and we haven't gotten any pushback from the IRS.
Yeah, Bert. So just ask your tax preparer to include your service-connected disability rating form. Probably
Right.
That would be my suggestion.
All righty, great. And well, I don't have one right now. I've been using since the 1040 Easy, but I was going to ask the tax expert, what do you think about the program SCORE?
SCORE, I've heard of it, but what is that?
Basically, it's retired tax. I'm sorry, Todd, I didn't mean to cut you off.
Yeah, I was just going to say it's like a board of advisors for businesses, the retired business executives. I
Okay.
think it's run by the SBA.
Okay. Oh, and that's a free service that's offered?
I think it's
Sure.
free. Do you think it's
Yeah.
free, Bert?
Yes, it is. It's they come on like why they start around November saying, hey, if you're, if you need income tax help, and we're here to provide you assistance.
Well, if this board is made up of experienced people, then I think it sounds like a great benefit, and especially if there's no cost. So I definitely take advantage of it.
Well, there's also VITA,
Oh, yeah.
the voluntary income
Yeah.
tax.
Yeah. I've, we've actually, hired people that have the VITA experience in their background
Mm-hmm.
and have done that.
Well, I'm glad I called this morning. I learned something new. I did not and was not aware of VITA. So thank you, Todd.
You're
And-
welcome. Thanks for the call,
Yeah.
Bert. Have a good day.
You as well. Bye now.
Okay, so that was Bert. He was asking about some tax questions related to service-connected disability with the VA that's not supposed to be taxed. So that was a great question. There's some other centers out there who are defrauding the federal government. One was a business called Raining Cash. That was
That's a
the
red flag name.
tax preparation. Right. That's a
Okay.
red flag. And what this guy did is he just put false data on the return for lots and lots of people. And for example, one false tax return, he reported false losses for a home healthcare company that did not exist. And so I think that just goes to show you need to know who you're doing business with. Do you have any advice about what people should look for when they're looking for somebody to prepare their taxes?
Yes, definitely. As CPAs, we could never name a practice in that manner because we're very restricted on how we can advertise. We can't make self-laudatory statements or, inferring that we can do this or this. We can't even say that we specialize in this.
Mm-hmm.
And say we'll just say like we have a focus in international and state and local tax, as opposed to just nuts and bolts domestic tax.
Right.
Because we could get in trouble with the state board if we say, we can get you a larger refund, or we're the best, or
which is
things
what we
like
hear
that.
on the TV commercials all the time.
Yeah. So, not everybody needs a CPA. But if you hear, if you have a name of a firm like that, if it sounds too good to be true, it usually is.
Good advice. Thank you. We got to take another break, but just remember, this is CPA Mark Nelson and Joseph Warren with Financial Planning HQ. They work as a team so that all of the advice that they give their clients is aligned. We got to take a break. When we come back, we'll be talking about legacy. Are you 100% confident that no matter what happens in the financial markets, economy, or world events, you will achieve your financial goals? If not, we have a process to get your financial house in perfect order and keep it that way forever. Your financial future shouldn't be a guessing game. Planning, advice, organization, and accountability are deliverables you should expect. For over 35 years, Financial Planning HQ has been San Antonio's trusted partner for comprehensive written lifetime financial strategies. Steve and his team, including sons Joseph and Jacob, don't believe in a one-size-fits-all approach. Instead, they create a personalized financial roadmap for you based on what's important to you. As an independent registered investment advisor, they're not tied to any big corporation's products. They work for you, creating inspiring, intelligent financial strategies that put your interests first. Call Financial Planning HQ at 210-685-2722. That's 210-685-2722. Hi, I'm attorney Todd Marquardt. If you don't have a will, the state of Texas decides who gets your stuff, and it might not go where you think. I'll help you create a simple, legally sound will that protects your family and your wishes. Call 210-530-4278. That's 210-530-4278. Or visit marquardtlawfirm.com for your free consultation. Do it before you die.
9:30 a.m. The Answer.
Welcome back to Talk Law Radio. I'm Todd Marquardt. On the radio, on podcasts everywhere, on Facebook, on YouTube, and on talklawradio.com. Please check out YouTube, search for Talk Law Radio, and look for the Lady Justice logo in the red, white, and blue colors, and click subscribe so that you can hear these episodes in bite-sized segments while you're walking the dog, washing the dishes, or working in the garage. But this is the legacy segment.
And now it's time for the Talk Law Radio Legacy Spotlight. What's your legacy? Sponsored by Marquardt Law Firm.
So Marquardt Law Firm sponsors the show, and attorneys at Marquardt Law Firm focus on business and estate law, including last wills, living trusts, and tax-protected inheritance plans. It's all about legacy. So we like to ask our special guest, which is you today, about your legacy. And you can talk about anything that you want to. Legacy is defined as an amount of money or property left to someone in a will, or it could be the lasting impact of particular events, actions that took place in the past or of a person's life. Or it could be lessons learned from those who have gone before you that you want those who come after you to carry on. So what does it mean for you?
Well, legacy for me means that you've done everything that you wanted to do in your life, that you set goals and you achieve those, and you don't look back saying, I wish I'd have done this or this or this. Like, I guess Joseph talked about, or you talked about, wanting to get your pilot's license and, things like that. It also means to me, as far as your children, what kind of people are they? And when I meet people's kids, and if they're, well-mannered, respectful, they say sir and ma'am, I think that reflects a lot on the parents, and that's their legacy, that they've raised, good human beings. And I look at my kids and I wonder, well, how could they be my kids? They're so good and so they're so well-mannered, and their generation is different. They're actually more conservative than we were. In my generation, we all went through our wild period when we were teenagers or whatnot. And, but now they just, they don't, do the things that we did. And they're very stable and very respectful, and really never gave us any problems while they were growing up. I'd much rather have them as kids than me as a kid.
Wow,
And
you're very blessed.
yeah, I really am. And I owe a lot of that to my wife and her really staying close to them and keeping them close to the family so they can't go off and be subject to bad influences or bad people.
Yeah, that's really good legacy there.
So I think, I think that's an important legacy, is that your offspring are good people.
Nice. Thank you for sharing that. I always remember Joseph's famous words about legacy. It's the sum total of all the decisions you made in your life. And so my question for you, Joseph, or for our listeners out there, is how are people going to remember the way that you managed your money?
Yeah.
Are they going to say, well, that guy was always in debt, or he was frugal, or he was charitable, or he was very generous?
Yeah.
So these are some words that sort of came to my mind about what somebody's financial legacy might be. Just not how much money you had in the bank or the assets that you left, but the values and what your beliefs about money were.
Statistic, you can fact check me, but I think like 97% of wealth is lost by the third generation. Like a huge chunk of it is gone. And if you want to keep wealth in the family, you make sure you make good decisions. You talk about money with your family, and that they know what to do as well when they have money. They're making those decisions when they're young and not when they're 40 years old making those mistakes, right?
Didn't you have some kind of money program for kids?
I do, yeah, for clients, for kids, and also for people who can't afford our services. I used to do money masterminds, and I'll do those by demand, but I don't actively market them anymore for people who want to learn the basics of finance and financial literacy. But for clients' kids, yes, we teach them about money. We'll sometimes have them on Zoom meetings with the parents there talking about money. Yeah.
Are some of your clients younger, or are these older multimillionaires?
It runs the range, but most of my clients are usually the youngest is around my age, like 40 and older.
Okay.
Usually, yeah.
Yeah, so that they might have young kids, or they might be teenagers, or they might be young adults.
Yeah, with teenagers especially, you want them to learn the lessons, but in a guarded way. You don't want them to have their credit card and just good luck.
Right.
Yeah, that's something that I see a lot in my practice, is that if someone is given a lot early, and a lot of wealth or what have you early in life without having to earn it, it ruins most of them. And it takes away their incentive to go out and achieve and to realize their potential. And that's a terrible thing. I know it's a very difficult thing not to do if you're very blessed. You want the best for your kids, but they really need to go out and earn it themselves, before you give them,
right.
Just hand them all of this.
Yeah. Well, it builds character. And I think it's important to contribute something to society.
Yeah.
The services that we provide, that's a service to society. And everybody that we work with, the good things that we do for our clients, they're able to do good things for their family members and their employees and their staff and the other service workers out there in the community. I think it's a big compounding effect when we can make a difference in someone's life, then they can go and do the same.
Definitely. Yeah.
Okay. Well, Another thing I wanted to talk about in relation to legacy was the SALT deduction.
Mhm.
This is something that I'm excited about because finally lawyers get to be involved in
Mhm.
something that has to do with income taxes.
Yep.
So most people have heard of the state and local tax deduction known as SALT because Congress was debating this, whether the deduction should be $10,000 or $40,000, and most of the senators wanted wanted the $40,000 deduction were from states that had an income tax. Well, in Texas, we don't have an income tax, but I think that people need to know that they might be able to benefit from this SALT deduction if they're itemizing their
Mhm.
taxes and if they have high property taxes. But the SALT deduction phases out if you're earning more than $500,000. So, but the good news is that a good trust attorney might be able to help prevent the phase out if somebody's earning more than 500,000 in annual income, and some of that income is produced from assets like rental properties, treasury bonds, interest, or dividends. There's a type of trust that we can create to offload those income producing assets so that that income goes on a different return, and then maybe they don't get phased out. So am I on the right track, guys?
Right, right. And we've used some creativity to get around these types of limitations where
Yeah.
it used to be that our fees, the tax preparation fees, the brokerage fees, planning fees were deductible a long time ago, but no longer. So what we've done is, like formed a family limited partnership, basically set up a family business where people will put property, brokerage assets, what have you. And, traditionally it was an estate planning tool, to get discounts and to
Mhm.
transfer wealth, to other family members.
Right.
But by creating a family business, we've been able to, have the business entity pay these expenses that may not be deductible on the personal return, but are deductible on the business return. And that's kind of in the vein of what you're talking about.
Yeah, that's another great strategy. Uh, Joseph, what do you think? What are some tips that we can give our clients in the last minute? What do you want? What's your final thought here?
Yeah, there's lots of different tactics that you can use in tax strategy, financial strategy, but the best thing is to have a great team on your side. So if anything piqued your interest, listening to Mark talk, Todd, me, reach out to us. And it's great to get advice from, top-notch experts working together to come up with something that's truly going to make your life better. It's truly going to put you in a situation where you have more free time to focus on things that are way more important than money, right? Time with family, if you're very passionate about your business, time in your business. And I think that's the main thing is sort of having, there's a proverb, I don't remember which one it is, but there's wisdom in a variety of advisors, right?
Right.
So I feel, and I listen to a Christian radio station, so it's important to reach out, just see how we can help. Because I know from working with clients, seeing Todd work with clients, seeing Mark work with clients, that we really help people a lot. And there's a lot that people don't know about finances. It's complicated, and I think it's designed that way. But it's good to have people who can help you get through it, make the best decisions, and just live a better life where you're not worried about money.
Yeah. Any last thoughts from you, Mark?
Yeah, I would agree wholeheartedly with Joseph that you really need to seek sound professional advice, for your decisions. And, the way that Joseph and his father and brother go about things where they, look at a person's goals in life, not just money goals, and shape their planning around that, I think is really a great strategy. And I've seen it really provide a lot of benefit.
Well, thank you for that testimonial. I'm going to say a short prayer and then we have to say goodbye. Dear God, thank you for this day and for all the blessings that you give to us. Please forgive us for our sins, our mistakes, for doing the wrong thing, and for failing to follow your will. Help us to follow your will more closely. Help us to consider the information we've learned today. Help us to be good stewards of the resources you provide. Help us to render unto Caesar what is required, but not a penny more. Help us to do everything we do for the good of your people, for our own good and for your glory. In Jesus' name, amen.
Amen.
I'll talk to you later.
Most families don't realize they have hidden legal blind spots until it's too late. Wills, trusts, Medicaid planning, even protecting a business. These are the kinds of issues attorney Todd Marquardt helps uncover before they become problems. Todd is the host of Talk Law Radio, where each week he guides listeners through the legal challenges families, veterans, and business owners face, while showing them the practical steps to protect what matters most. Catch Talk Law Radio, Saturdays at 11 a.m. on 9:30 a.m. The Answer, 6:30 a.m. The Word, and now in Houston on AM 1070 and 103.3 FM The Answer, or anytime on YouTube. Planning isn't just about documents. It's about peace of mind, security for loved ones, and building a legacy that lasts. Don't wait for a crisis. Do it before you die.